In today's episode, we're going to be talking about why mining stocks are so important into a stacker's portfolio. We're going to be talking about the difference between this stuff, gold bullion, mining stocks, how to pick the right mining stocks, and what the heck is going on in the macro environment. And today we are joined by Blair Naughty, the CEO of Great Thunder Gold, traded in the US as GTGFF as their ticker symbol. We talked about them on the channel recently, and we're going to be breaking down everything that's happening in the gold and silver mining stocks markets. So we'll link the website to Great Thunder right there down below, where you can check out Great Thunder Gold. And again, they are trading as GTGFF. And so make sure you hit the like button on today's video. Give us a comment down below that says "Go Gold Go" right there down below. And it's good to see you, Blair.
It's nice to be here.
Yeah, you got the nice background.
Yeah, I'm just here in Whistler, British Columbia right now. So
awesome. So I polled my audience recently, and I asked about types of content that they like to see. And one of the obviously there was many, but one of the common ones was about mining stocks, right? So you're the CEO of a mining stock, which is Great Thunder Gold. So we're in a world where there's so many mining stocks. So tell us, in a world where there is so many gold stocks, silver stocks, natural resource stocks, why is Great Thunder a buy, and why should someone listening make it a part of their portfolio?
Well, I think one of the things that you look for in any junior exploration company is, the ability to hit home runs. You want people that are swinging for the fences, hitting home runs. We're not in the mining business; we're in the mining exploration business. So we are looking for gold deposits, etc. So Great Thunder Gold is well versed in. Everybody in the company is well versed in the industry. Obviously, we have a great geological team. Myself, I came from a background of actually more on the brokerage side, understanding the capital markets and how important capital structures are for a successful mining company to, fail multiple times before success, et cetera, I guess you could say. So that's a very important thing as far as the junior mining companies. You want the right shareholders, you want the right structures, so you can get in the right areas where there's new discoveries or new thoughts on geological settings. Get a good property, have the connections to get the good property, get the good properties, and work them. And if you miss and you move on to the next one, the company's not finished because you're well structured. You have money in the bank and good shareholders. You can continue exploring as you go. So that's where Great Thunder is. We're well structured. We have under 40 million shares outstanding. I come in as the second largest shareholder at about 18%. Eric Sprott owns about 19.5%. There's a few other funds and friends that own 8 to 9%. So it's well structured. I guess my job as a mining exploration CEO is to try and get us into areas where we can really try and swing for the home run. So obviously home run hitters strike out more than people that hit for average. But my job as a CEO is to get us into a good pitch count, I guess you could say, as an analogy. So I want to get us into an area. So Wallbridge Mining was hitting some out of this world spectacular numbers in Quebec last year. So we rushed in there as quick as we could and got as much land, tied up as much land as we could in and around that discovery. We just did our maiden drill program on that. We've now figured out where not to drill. So from there, we're going to move on to other drill targets. We have a wonderful lithium property that I inherited when I came in as CEO of the company that we have drilled and had some tremendous success so far. We're looking forward to drilling that again. And in the meantime, there's a company called Newfound Gold, which has gone up from 25 cents to $12 in the last 6 months on some out of this world numbers, some big intersections of gold that couldn't be ignored. So we have rushed into that area and tied up significant chunks of land all around the area. And right now, as we speak, our stock is halted pending news. We have now, I guess the news will be out and after we air this, so I guess it's okay to say that we have now tied up an extremely significant chunk of land right in the area, right along the fault lines that these structures are thought to be on. These discoveries have all been on this fault line and a couple of different fault lines, and we have tied up large land positions. So we're now a major player in the area, and it's an exciting time.
So Eric Sprott is beating you by about 1.5%.
And probably about probably about a few and a half billion too.
So,
but yes, he was an early investor in it. I mean, I was lucky younger in life. In my 20s, I got to sit next to Eric for 5 years when I worked at Sprott Securities. I guess that was 25 years ago, and we've kept in touch since then. And so he's got a great enthusiasm. He's a very smart guy. He loves this area, and when I talked to him, and he was so passionate about this area, I knew I had to get us in there as quick as possible because there will be a rush of people that are going to be coming into this area, and so have to get us if we get land positions as cheap as possible.
So tell me, for Eric Sprott, right, the most successful, legendary natural resource gold mining stock investor that's out there in the world, and going through Great Thunder's information, I was struck at how much of the shares of the company are tied up just between you two alone. But to have Eric own that much and be, the person that he is, why is that Eric has so much tied up in Great Thunder and between the two of you? That's a lot. I mean, we're not talking about 15% total. We're talking about over 30% total between of the entire shares.
Well, for him, obviously, it's not a significant percentage of his net worth, so I can't say I'm his number one holding by any means. I think Eric owns a large percentage of quite a few ones in this area, but I mean, for this Wallbridge, or for Great Thunder Gold and the Wallbridge discovery, and now the Newfound Gold discovery, I think Eric believes in well-structured companies. I have a personal race with him. I think he knows, his money's safe with me. We're going to drill, and we're going to keep trying to find these big deposits. And the best place to find a big deposit is around another big deposit. So whenever there's a new discovery, there tends to be a huge staking rush. All boats float around there. Everybody gets financed, and then the drill is the lie detector. So we're looking forward to it. I mean, some of the properties we're getting are more advanced than others. Some of them are almost drill ready. We could possibly drill in the fall, winter this year. And
I remember last year watching that incredible run that Wallbridge and that Newfound had as well. And I recall Eric on his weekly wrap up was talking a lot about it. So exciting times, especially with you guys getting the additional land now. When you look at the macro environment that draws someone to gold, you would say it's probably never been better. If you disassociate from pricing itself and you just look at the sheer number of currency units that are being printed, you look at the promises governments are making with infrastructure and the life support that the global economy is on. All of these factors are obviously very exciting, and they're the things that drew us to gold at today's levels in today's market. Tell me the difference between the opportunities with this versus mining stocks. Many people are introduced to mining stocks through firstly owning bullion. So talk to me a little bit about that.
Well, I mean, having that gold coin, which I have plenty of gold coins and silver bars, because that is the blue chip. Okay, so I mean, you look at it as a blue chip. That gold is thought possibly to go to $5,000 by some people. So it's 150% move. I mean, that's pretty significant. In the junior exploration business, I mean, just looking at our chart or anybody's chart, really, if you look at any junior miner, I think this year we might have a low of 35 and a high of 95. So, right there's a 300% spread. A lot of these ones that are in Newfoundland, let's say Labrador Gold is a big holder. Exploits, I mean, these were 5-10 cent stocks that now trade at $1.50, $2 within 6 months or a year and have 10-15 million dollars in the bank of capitalization since they've got this land. So I mean, in the life mining cycle in the cycle of exploration companies, you get the properties, you work them, you go up and down, you can ride 100, 200, 300, 500% waves without actually ever even drilling. Once the drill hits, I mean, Newfound Gold went from 25 cents, 50 cents up to now $12 a share. That's the dream. In the meantime, these stocks have waves of ups and downs that that are not for all investors. So I mean, obviously gold coins and silver coins are much more stable and I think they have a great future in them. Mining exploration stocks are obviously a little bit more of the casino, but at the same time the payoff is much larger. So I guess the difference would be mining exploration stocks would be the roulette table that pays 30 to 1 versus blackjack where you win 1 to 1. So different players, different odds. Obviously, the odds are skewed accordingly.
But so you've been in this industry for a while. You've worked very closely with the Eric Sprott for a long time and many other successful individuals. And what draws many people to mining stocks is, as you said, that kind of risk reward opportunity. Doug Casey, very famous speculator, discusses this at length. What do you think are the most important skills, attributes, things to know, strategies that make or break a successful speculator in these types of smaller market cap mining stocks?
Well, I think there's a few things you got to look for. Number one, you got to look for, how much is the management taking out of the money that's in the bank? Is it a lifestyle supporting thing? So that's the number one thing you got to, you can find that out by looking at quarterlies and filings. Number two, I mean, you could have great geology and company run by geologists, but if they don't really understand the capital markets, they could be sitting there, I always say it's almost like I don't know if you guys have McLean's toothpaste in the States or whatever, but just say a lower toothpaste versus Crest. What's the difference, really? So a lot of it is marketing and advertising and letting people know that you exist, right? So, a lot of these companies have great geologists and great properties, and they just dwindle forever. They never trade, they're illiquid. They keep raising money at low levels because nobody knows about them, and then they just, get a big bloated share count. And then if they drill and they miss on their first drill hole, they have to consolidate the stock and start all over again. So I think an important part is understanding how to market a stock, number one, because we are, that's part of the game as well. Good geologists, good team of geologists and mining engineers, if we get to that level, and, a strong stomach.
a strong stomach.
No, but I think you have to look for, you don't want things to have too many shares outstanding. You want some liquidity. I mean, on a lot of things, what I look for myself, I mean, this is what I tell my sisters and cousins and brothers and whatever, is you get into the thing, you double your money, sell half of it, and then the rest is free, and you can do whatever you want. If it's a big hit, great. If it's not, you didn't lose anything, but you can have successful failures. You can be up 3, 4, 5 times your money without missing, without having a failure. So that's the beauty of an exploration stock. So I think an important thing, as I said, number one is the management, how much they're taking. Number two, share structure, who the shareholders are, how big the float is. Number three, the ability to market and tell the story. to the public.
Okay, so let's talk a little bit about lithium, right? Because you
Okay.
guys aren't just focusing on gold, but also
Hmm.
on lithium as well. And it's an interesting commodity, of course, because of the EV and all the infrastructure spending. So let's talk about the macro thesis for lithium, but also the micro as it pertains to Great Thunder Gold specifically.
Okay. Well, I mean, we ended up actually. I was a shareholder when this the first time I bought Great Thunder Gold, probably 10 years ago. It was maybe 8 years ago. Was for these lithium properties.
Hmm.
There is the electrification of the world. It's not just cars. I mean, everything's electric, from your screwdrivers to your, what have you. All tools are becoming electric. The whole world's going electric. So obviously, these lithium-ion batteries they don't have anything that's better conductor than that. So lithium is in demand. It's going to continue to be in demand. And the properties that we inherited, or I inherited at Great Thunder Gold, showed some great promise, and we figured we should probably stick some holes into there and try and create some value. So we did do a small drill program, and we were very excited. We hit some good intercepts of high grade lithium, and as we were going further and further south, the numbers were getting bigger. The seam was getting wider. Unfortunately, at that time, we hit a swamp. We couldn't drill anymore, but in the winter when it freezes up, we can get back on there and get back to where it seemed to be getting thicker and larger. So we're very excited about the lithium property. We have announced on 2 occasions now. We do plan at our AGM to spin it out as a dividend into a different company. So if you were a shareholder of Great Thunder Gold, maybe you get Great Thunder Lithium, and I don't know what the percentage they're going to be. We'll have to look at what the value is potentially of that compared to the other properties. Maybe you'll get 1 new share of that for 4 shares of Great Thunder Gold. I'm not sure what. Again, that'll be sorted out in a fairness opinion and tax opinions, etc. And then we will explore it as a separate company, the lithium. We want to stick to the gold and silver and Great Thunder Gold, and put the lithium, and maybe that might just be a battery metals company. We might look for nickel properties. I'm not sure. It's down the road, but
Right.
But we believe there is a future in lithium, obviously, and we're not the only ones. There's as for every gold stacker, there's probably a lithium. You can't stack lithium, but there's a lot of lithium bugs out there as well.
Okay, so we got Great Thunder Gold in the US trading as GTGFF,
Yep.
and in Canada as GTG. So be sure to check out Great Thunder Gold. Now, I want to move to a very interesting topic to me, which
Okay.
is you've worked pretty closely, as we've said so far a couple times, with Eric.
Yep.
Eric Sprott quite well. What have you're also, you and I were talking off air, we read some of the same types of personal development, philosophy, mindset type of books. And so I wonder, what are the big things that you've learned about success, about investing from Eric, either directly things that he said or just spending so much time with him? I would imagine that's been a huge opportunity to, someone with quite a few B's at the end of their
Yeah.
net worth.
Well, the one thing that pops into mind, I remember in the early 90s when I worked there, was we always had a screensaver that said bonds are for losers. But anyways, so I've avoided the bond market, number one. I think with Eric, what I've learned a lot is, be early and be right and sit tight. So you're not going to make a lot of money trading in and out of things. I mean, because traders go in and out, and then they have six wins, and then the 7th one loses all the money from the 6 wins. So I think to be smart, you place your bets, and maybe you take some off the table as it goes up, but generally you keep your core position, and you sit tight if you believe in it, and you ride the ups and downs, and that's how you get the big money. And as a person, he was a wonderful boss. When I worked with him, he would take the whole company to Florida with girlfriends, husbands, whatever you had. There was every Friday, the whole company would go out after work, for drinks, etc. So, I think he treated everybody equally, from the mailroom to the head of institutional sales. And, he always sat out on the desk, never sat in his office. He was out there in a pit with everybody else, and I think that was a very important lesson at a young age to learn as well. So
interesting. So you said be early, be right, sit tight. Yeah. And watching this commodities market, not just gold, but all commodities, mining stocks, and seeing how volatile they are, and also having a channel bringing on big successful investors like you, I've really come to watch a lot and learn a lot, and then also having a large audience. I've seen where people they're early, but then they leave with all the volatility. And you talked about having a strong stomach, and you said Eric's success was be early, be right, sit tight. Can you talk a little bit more about that? Because it seems so simple, but it seems like that's really what it boils down to, huh?
Well, I mean, if you believe in a sector, so I mean, funny enough, when I worked at Sprott, he didn't like mining stocks. They were out of favor, and it wasn't something anybody cared about. When I left a couple of years later, it was the tech boom, and I ran into him, and he said, "Oh, you're in tech, you're making lots of money. That's great." And I was probably like 30 years old, on top of the world, right? And he said, "You're going to lose all your money. I'm short all the tech stocks, and I'm buying gold." And I thought he'd finally lost his mind. But that's the time where the sector was taking off. After the tech wreck, and about oh, by the way, I went broke about 2 weeks later. But after that, it's a long cycle. The mining cycle is typically six to 8 years. You don't know you're in it for the first couple. Just people won't swear at you if you mention mining stocks for the first 2 years. But there's not a lot of froth, and then there's a couple years of volatility. Like last summer was a wonderful time to be in mining and exploration. Everything was taking off. It was great, and then like all things, parabolic moves tend to level out. But if you look at the long term, if you think you are in a commodities cycle, years 5 to 7, 5 to 8, if you're lucky, are really banner times to be holding your positions. So I think it's important to ride the cycle out. There's always going to be surges and purges along the way. But if you believe in a sector and you have conviction in it, I think you ride your bet. And you can always take a little off the table and get your original investment back, etc. if things are going well. There's nothing wrong with that. But you need the big wins, because you're going to have some losses too. Not all your bets are going to be right, so you got to ride those winners to compensate for the ones that you had a conviction in that didn't work out quite as well as you wanted.
What inning do you think we're in then?
I think we're in the fourth. I think we're in about the fourth inning. Maybe coming into the fifth. Now, I mean, if there's a big catastrophic event in the Dow, etc., I mean, it's what happened. The tech wreck, out of the ash of the tech wreck, became the huge mining bull cycle that was wonderful from 2001 to 2011. It was kind of an extended cycle, really. Well, I mean, some could say around 2008 there was some tremors, but so usually out of those events, there's a flight to gold and commodities, etc., a safe haven, I guess you could say. And usually the majors are the first to move. The majors, all the money flows in the majors, then they get overvalued, and then it goes into the mid tiers, and then the exploration stocks. I guess I heard something once, and I don't know the exact numbers, but it was like, if all U.S. fund managers moved 1% of their fund into gold and gold stocks, the index would double in Canada. Wow. Just 1%. So what happens, I guess, in those frothy times is, there's a whole bunch of people trying to squeeze in through a little hole in the fence. So you have some parabolic moments where you can make a lot of money, and you don't want to miss those. You don't want to have sold out too early because you had a little bit of a win. I think you want to, for me anyways, I like to ride them out and see them to their full potential. So
So it's really having a strong thesis in a macro trend, and then picking the right stocks. You talked earlier
Yeah.
about not just about Great Thunder, but you talked about just in general how to pick
Yeah.
and know some of the right stocks, and then just having, like you said, the stomach to move through it. Be early, be right, sit tight.
Yeah.
Is that about right?
Yeah, I mean, as I said, structure is a very important thing. So, I mean, you don't want a giant public float. You want the insiders to have good ownership because, like if we drill in Fenelon and we miss, and then we drill in Newfoundland and we miss, and I'm not saying we're going to, but these things happen. You don't want it to be over then, like you want the share structure to allow you to raise money again and again and again and get up the bat another time and swing for the fences, a few times in the life cycle. So I think it's important not to look into stocks that are, long in the tooth, that have, large share counts and not a lot of money and not a lot of inside ownership, because the chances are, if there's a miss, there's going to be a consolidation. I don't know if the listeners know what that is really, but if there's 100 million shares outstanding and the stock's at 2 cents and they can't raise any money, they're going to consolidate at 1 for 10, get it back to 10 million shares, and then do a big financing. And at that time, probably the new insiders will get in, but you won't have much left at that point. So I think it's important to get into stocks that have reasonable share counts, that are well held, that everybody's interests are aligned, the insiders and the investors. So
How would you say you guys rank on that scale?
I think we're pretty good. I'm a fairly large open market buyer. If you look at insider reports, I mean, I'm in there buying. I mean, there's a lot of times where I can't buy because I'm in blackout. I mean, we're in negotiations for a property, or there's pending assay results in the lab. I've got to be careful. But I'm in there, buying whenever. Unfortunately, sometimes when it's weak and I really want to go into buy is when we're doing something. But I think, owning 18% is fairly large. Is not, you probably don't see many CEOs that own large percentages. And then, as I said, we got a large shareholder in Eric, and we have 3 or 4 other people that are close to me that own 6 to 9%. So we're all believers. We all understand how the game works, and as I said earlier, you can't promise home runs, but you as a CEO of an exploration company, you want to get into a good pitch count, and when the fastball comes, hopefully you're hitting it out of the park.
So let's stick to that baseball analogy. So you're at the plate, and you're trying to tell, is the pitcher going to throw a changeup, a two seam? You're trying to see if you can get a read a little bit from the way he's moving his wrist there. Now let's apply this philosophy to the larger macro environment. What are you guessing on? Are we going with fastballs and there's more money printing and more inflation coming, or are we going to a knuckleball and deflationary? I mean, what's your view?
Well, there's been a lot of knuckleballs, that's for sure. Well, I just think, there's a lot of asset classes that are inflated. I'm sorry if anybody in your network is, I'm not a big believer in Bitcoin or any of these things. I mean, I think they're just asset classes that are inflated, just like penny stocks almost. It's the greater fool theory. They move up and down, and I don't think there's any intrinsic or real value behind them. Now, I'm not an expert. That's just my opinion. I think from, history repeats itself often. So usually when things start to get a little bit rocky and asset classes are overvalued, the money flows into classes that are undervalued. And there's not a lot of mines been found lately, and copper mines, gold mines, silver mines, etc., because there hasn't been money spent in the last sort of, there was a dry period for about 8 years where there was nothing really going on. Nobody could raise any money. So obviously the supply demand is in the favor of the investor right now. And when the world starts coming in there, and I'm hoping that all these young people that are chasing these crazy altcoins, for a nice word for them, I've heard other words that are not as nice that rhyme with bitcoins. Hopefully we can capture some of the younger investors into the mining area too. I mean, once you get gold fever, it's kind of hard, as to shake it.
Yeah, that reminds me of that bit. I heard. Have you heard the Paul Tudor Jones bit recently when he was talking about investing in commodities, and he was kind of talking about the money flow from institutions or retail could, it's such a tight market, it could turn the whole thing over, and he was kind of predicting that. I thought that was pretty interesting.
Yeah, I mean, the Americans have not. They flow in, sort of a bit later in the game, and a lot of the American funds, et cetera, they need higher market capitalizations just to invest in them.
Got it.
Mm. But I mean, the UK, Australia. I mean, there's a lot of Switzerland, et cetera. There's a lot of mining investors in the world, and there's a lot of money that's kind of on the sidelines waiting for the signal of when the game's on. There's been a few false starts, and um, but I think I think that there's no choice for it. I mean, the U.S. dollar has got to crack at some point, which will, obviously move the gold up. We all know that silver is manipulated, and that trade's got to get unwound at some point. Um, Copper obviously is going to keep going up. There's so much of a supply demand issue. So I mean, if all the commodities rises, all the boats float, and I think it should be a lot of fun. I'm hoping that we're just coming into those innings that I was talking about, the big ones.
So
And it seems like it from I mean, I started when I was 18. I'm 50 now, so I've been through a few of these cycles, and obviously they're not all identical, but they all sort of have the same characteristics to them, and it definitely looks like that's the case, that we're coming into one. And I know a lot of smart people being in the business this long, and all the smartest people I know feel the same way. So sometimes that's not a good thing if everybody agrees. But
well, what I like about it, and what I like about this conversation is it's not it's I think it's really nice for us retail investors to, to be able to kind of peel the layers back
yeah,
on on a lot of the big investors. I mean, a lot of the people, you've said you've been involved in the industry for that long.
mhm,
You said talking about, being close with Eric. I think it's nice for retail people like me to be able to really peel the layer back. Not only just, you're certainly a very honest individual. You're talking about giving us the real peek into Great Thunder Gold, but also giving us the peel back to the investor psychology and what makes certain people successful. Is I think it's really important.
yeah. I mean, the biggest thing is buy the fear, sell the greed, I guess, is the old rule. And but as I said, be right and sit tight is probably the one where you're going to make the most money. So if you really believe in it, and you actually have reasons for your conviction other than you read it on a Twitter page, or you just have to stick with it, and cross your fingers. I mean, we're in a highly speculative market. Being in the junior mining, you can make 10,000%. You could lose all your money, etc. So it's not for the faint of heart. And I think you really it should be a percentage of your portfolio. I don't think it should be all of it. But you should talk to your financial advisor about that. It's not nowadays. You got nothing can be construed as advice. So I can just say for me. I'm probably 90% in the junior mining stocks and speculative stocks, but I've learned to live with that fear, and I can sleep at night where a lot of people would not be able to.
So you laugh a lot when you talk about a lot of the volatility of it.
Yeah,
And you and I were talking off air. We're talking a bit about Michael Singer, and his kind of whole thing is about basically letting go and
yeah,
surrendering. So let's talk a little. You seem like you have no problem letting go to the
yeah,
fear of loss, which is probably what also opens you up to winning so big. Because
yeah,
when you let go of the fear of loss, that's what allows you to be able to sit tight. If you have such a tremendous fear of loss, that's when you buy and sell at the wrong time. So talk to
mhm,
me a little bit about your kind of your psychology, because it's been kind
yeah.
of interesting. You say something and then you'll just kind of laugh.
Well, you said, I mean, we both are big fans of his Michael Singer, and the surrender experiment, etc. And I just learned through my life. I mean, I'm 50, so I haven't been around for a long time. but I've been wiped out. I've had lots of problems, and like it's never, like most of the stuff you're worrying about doesn't ever actually happen. And every time you get knocked down, you will get up again. And you know, you can't try and control things. You can't worry about things happening. You just have to, let it ride. And if everything goes wrong, etc. Eventually. I mean, think of when COVID hit last year. How many people were thinking like, "That's it, they're wiped out, they're finished." My stock portfolio is going to zero. Every stock is going to zero. This is going to be the worst year in stock market history. The big crash is upon us. And look what happened. The opposite happened, right? What happened is every retail person in the world was sitting at home with all their CERB checks and all the young people, and everybody poured in the market, and it turned into a ginormous win for everybody over the last year and a half. I don't think it's been a better market really in the last year and a half. So I just don't spend a lot of time worrying about it. I'm used to, my portfolio can go up and down 34 or 40% in a month, and that's just the way it is. And I don't have a super high lifestyle, so I'm not that. Yeah, I don't sweat it. And,
Powerful.
Yeah, well, not everybody can do it. I know my wife is not a big fan of it. But for me, I just learned to accept it over the years. I mean, it's a different psychology too. So there's two different kinds of people, I guess. So if I went to the casino with $2,000 in my pocket and I got it up to 50,000 and I walked away with zero, to me, I lost 2,000. A lot of people think they lost 50. So it's just a different way of thinking. So
how did you acquire that?
What's that?
How did you acquire that type of thinking?
I guess it's like a callus, eventually, just so many times, so many speculations up and down, and it just, for after every loss, there's going to be a win. So I just have some faith in myself and my ability to figure out the key things in successful speculating, which, as I said, was good management, good share count. Obviously capital is an important thing, and people that actually get the work done too, not just sitting on an exploration company and a bunch of cash and making it a lifestyle. You got to drill and kill them and move on to the next thing there. And I don't know, I enjoy it. It's like being a treasure hunter as an adult, so kind of fun.
I like that. I really enjoyed this conversation. It was very enlightening, and I think those listening will find this very, very helpful and very useful. We're trying to really build essentially an education platform to help make sure that as many of us retail investors get to participate in the same types of movements and returns that people like yourself, people like Eric, people like Rick Rule, people like Doug Casey, have the great stories about. And the only way for us to do that is to learn from people like you, and especially from the mindset perspective. So I appreciate learning all that. For everyone listening, I want to encourage you to check out Great Thunder Gold in the US. It's traded as GTGFF, and in Canada, it's traded as GTG. I'll link the website right there down below as well. Make sure you hit the like button on this video. Give us a comment down below that says "Go Gold Go," or let us know one thing you learned from today's episode. You could even comment down below, "Be early, be right, sit tight," I think is a good one for us all to remember. Did I miss anything, Blair?
Oh, that's it. That's great. And yeah, I guess, as I said, but we will have, the stock is not trading right now. It's halted pending news, and we have some significant news out tomorrow. So, read up before the open, and we hope to have you as shareholders.
Awesome. We appreciate you taking the time. Thank you for sharing all that. We'll link all that down below. We'll link the news release as well, right there down below, the website. And thank you, Blair, and thank you, Great Thunder Gold.